Okay. Good day to one and all. This is Dr. Sivaram of iknowindices.com. Today, the market is anxiously waiting for the US GDP outcome. I'm going to give you the spike trade call before that of the US GDP data release and also review the results of the trades, what I suggested, and also review the market after that of the GDP data release. So currently between 11:30 and 12 GMT, I will explain to you what is expected to happen in the form of a forecast before that of the US GDP data release. And also I'll give you the trade calls. So what sort of trade you can do, either you can do a buy and sell or a sell and buy trade. And you can just do those trades or just watch those trades in a demo trading platform and find out how far such trades have become successful. Then you can come back by 13 GMT. Then I'll review the trade calls, what I have given it, and also review the market in order to give you the indication how exactly the market is predictable. Especially the forecast is given before that of the prime data release, like the non-farm payroll, US GDP, and also other type of FOMC meets, etc. Mainly to help the small traders to earn whenever the spike is going to happen. Invariably what happens, whenever the prime data release time is being announced, immediately the traders become very confused whether the data will be positive or negative to that of the market or to euro or GBP. Then they wanted to really ascertain what sort of trades they can do it. But invariably, the analyst and also the other people who give the market comments, they say it is better to wait for the market to settle down, then later on you try to trade. And in the event when the traders find that suddenly the market has moved in line with their expectations, and if they missed to enter into that of the market, then they think of a next type of trade, namely a breakout trade. So whenever the currency goes up and breaches the resistance and goes above, then immediately they think of a breakout trade and try to buy after the rise. Because the data also strongly suggests that it is going to be US negative or US positive, then accordingly they either do a buy and sell trade in euro or GBP or a sell and buy trade in euro and GBP. In that process, what happens? They find the going is good, but if they fail to book profit in a matter of over 10 to 15 minutes, immediately the market reverses and show them the loss in the position which was initially making profit. And later on they repent. Oh God, we have taken a higher level buy, the market has really corrected. And they like to ask various analysts why suddenly the market has come down unexpectedly. The data suggests that euro has to go up, whereas the market has come down or euro has come down. Why it is so? Then immediately some excuses might be given in a forum or in a chat with their analyst, etc. Then later on, they really repent and lose the money and keep quiet, because no trader will talk about the loss-making trade. If a trade has made about 100-150 pips profit, they'll be talking about it for 2-3 days to whomsoever they come across. But if they incur loss in a trade, they never discuss it. This is how it goes on. So invariably you come across the traders assume certain type of trades and enter into the market, and later on they find they are being disappointed. So here In that process, I thought that I should help the traders to participate during that of the spike, which is going to happen before or after that of the data release, and in what way they'll be able to make some quick bucks. So that is what my intention is. And so I give that trade suggestions. You can try it in a demo trading platform, and later on you can just, if the going is good, and after watching several such spike trade call webinars, probably you can also fine tune your analysis and accordingly take appropriate positions. Now for that, we take into consideration the forecast. The forecast I give on every Monday during my Asian session live market analysis. That I give it for all the 5 days of the week. Then we do the market reading with the help of the initial lows and the highs set by the market around 3:30 GMT. Then I'll explain to you the trading strategy, what you need to give or what you need to take into consideration so that you'll be able to really limit the risk and maximize the profit. What is going to happen? The forecast says that Euro and GBP are expected to make the slide. During that of the Japanese session, you would have noticed that they just quickly went up and come down. And during that of the European session, they are expected to make a swing and rise. And so European session gets over by 13 GMT. And the US data is, US GDP data is to be announced by 12:30 GMT. So what is going to happen? Then afterwards, the following section is the US session. What is going to happen? So these calls are pertaining to that of Euro and GBP. So Euro and GBP are expected to make the rise towards close of the European session and then start making the higher level swing and then slide during that of the US session. So when they are expected to make the swing and slide during that of the US session, any quick upward move, we should be able to take sell position so that during the slide, we'll be able to take some good profit. So the forecast says Euro and GBP are expected to make false rise before 12:30 GMT and swing and firm up little bit after that of the data release and slide during that of the US session. So this is the forecast. Now we'll take into consideration the market reading. So for the market reading, we note down the initial lows and the highs around 3:30 GMT during that of the Japanese session. With the help of the live market code page, we note down the initial lows and the highs and try to find out where the market is at 11:30 or 11:40 GMT or by 12:30 GMT. Then we know what the intention of the player is. Now in the case of Euro, 1.1215 was the initial low and it came down from there by about 5 pips to 1.1210 and claimed above and went up to 1.1236. 1.1233 was the initial high and went up by 3 pips and now come down to 1.1222, the middle level. So they had done a brief 5 pips downward stoppant and 3 pips upward stoppant, and they have done predominantly a consolidation with 26 pips difference between the high and the low. So they are simply holding Euro. Now coming to the GBP. The initial low in the case of GBP was 1.3015, but subsequently GBP came down to 1.2984, breaching this, and come above that of 1.30215 and currently holding around 1.3023, and the high was 1.3058 during the Japanese session start, and that is remaining as such. So they are not breached the high, but they have breached the low, came down by about 31 pips from that of 1.3015 and come above, and then holding above that of the initial low 1.3015. In the case of yen, 100.66 was the low, 101.41 was the high, and they just breached the high, and they are staying above that of the high after forming 101.75 as the new high. They are staying above that of 101.41, indicating that they wanted to make further rise. By looking into the net changes in all the currencies, the forecast says that euro and GBP are expected to firm up and then slide. Any quick rise in the case of euro or GBP around that of the data release time is a great sell opportunity. And in the case of USD yen, it has already breached the initial high, and staying above that initial high, a small dip is a buy opportunity in the case of USD yen. Then in the case of CHF, 9702 is the initial low. They just breached the low, came down to 9698, and 9716 was the initial high. They just breached it and went up to 9724 and then come down and holding around that of 97 level, slightly below that of the initial low. Then in the case of Canadian dollar, 1.3049 was the initial low, 1.3098 was the initial high. They just breached the initial high, went up to 1.3116 and came down and staying below that of 1.3098, and indicating that they are likely to come down in the case of USD CAD. So it will be making the USD weakening move. And in the case of Australian dollar, 76. Sorry. Okay, 76.53 was the initial low. So 76.53 was the initial low, and 77.11 was the initial high, and they are simply holding between the low and the high without breaching the levels. So here it indicates that in the case of Australian dollar, they are not breached the low or the high, but in the case of Canadian dollar, they went above the initial high and come down. And in the case of USD CHF, they just breached the initial low and staying below. So here you find that euro is making less than 40 pips spread, and CHF is also making less than 40 pips spread even in the current situation. And in the case of yen, it has made more than 40 pips spread between the high and the low. And in the case of GBP also, it has made more than 40 pips spread between the high and the low. So what currency we should bet? And we can definitely or ideally choose yen, USD yen, and GBP, where the spread between the high and the low is more than 40 pips. The players are going to make active moves in those two currencies. And also in the case of Canadian dollar, they are going to make active moves. And also if you look into that of the market currently, Euro, GBP as well as USD yen are showing the USD is showing the mixed move, positive net change. And CHF, Canadian dollar, and Australian dollar are showing negative net change. So they intend to make contrarian move before and after that of the US GDP data. That is what market reading says. Now, what we could do. So the market is expected to, Euro and GBP are expected to gain nominally and then slide during that of the US session. So around the time of GDP data release, they are expected to firm up, and at that time we can take sell position. Then later on, in the case of USDN, we can take around that of 101.42 or 43 level, or slightly below if they make a dip, a buy position. When Euro and GBP make a gain, they could come down below that of 101.41 and then start gaining the level. So what trades we can do? Here you come across the trade recommendations. So the spike trade recommendations are given here. Now we come across that Euro could make another 10 to 15 pips gain. 1.1233 was the initial high, and they went up to 1.1236 and come down, still holding it. So they could pretend make a false move up to that of 1.1233, a false move up to that of the initial high, and start making the slide after the data release. So a sell with a hedge order to limit the risk, 1.1232, around that we can take a sell, and they could drop by at least 50 to 75 pips. And ideally we can keep 1.1156 as the exit level, and 1.1267 can keep the hedge order above that of the high. So these are mathematically calculated levels because they make moves for every 25 pips. But those 25 pips move based on the prime numbers. It is not the supports and the resistance what we conventionally calculate. These are all the levels estimated based on the prime numbers, and you can keep those levels and you will be able to find that the players fill. And also in the case of GBP, so SL recommendation is given around 1.30, probably around 2.3, the current level, and wait to see what happens later on. Then we can keep 1.3050 as the hedge order, and 1.2978 we could keep the exit order. Then in the case of Australian dollar, because GBP, as you've seen, that they are not breached the initial high, it breached the initial low and came up. Above that of the initial low, 1.3015, they are just gained, and they are simply holding in the middle level, pretending as if it is going to gain, but they are not breached the high from the start of the session. So they are likely to come down again. So this is what they make as the type of move. So we need to follow that and then try to take a sell position around that. Then in the case of, then about 30 pips above that we can keep the hedge order, and about 45 to 70 pips below we can keep the exit order to exit out of the position. Then in the case of Australian dollar, 0.7669, the current level, we can take a sell position with 76.90 as the hedge order, and 76.23 they could come down. And in the case of yen, as I explained, that 101.41 was the initial high. They went above that of the initial high and holding it, and they are likely to breach the initial high, pretend as if it is going to fall as a market trigger, and to hit the stops and then start gaining the levels. So we can keep a buy limit order at 101.36 around that level, and it is likely to gain up to 75 to 100 pips. And then we can keep 100.90 as the hedge order to limit the risk. So these are all the trades I wish to recommend, and you can just try it in a demo trading platform and see what happens to that of those trades after that of the US GDP data release. And so it's most likely the US GDP data could be positive or neutral to that of US dollar, but the players are expected to make the month-end move. And the month-end move, as I explained it in my forecast on Monday, tomorrow I'll review the forecast, what I've given it. So they are expected to make the swing and slide, swing and rise, and the swing and slide today. And tomorrow they are expected to make the swing and firm up during that of the Japanese session, and then swing and rise during that of the European session, and then drop again Euro and GBP. This they do it during month end in order to handle the derivative markets. So this is the basic objective of the players. They handle the derivative markets and earn money. It is a money earning process for the month end and the new month beginning. So they make the monthly trend reversal during that time. So during that particular time, if there is any data release, and they will try to use it to their advantage, irrespective of the data. Respective of the data, they will try to make use of it to their advantage. So they are likely to come down in the case of Euro and GBP for the month end. And so it is appropriate to do the sell and buy trade till month end. Afterwards, tomorrow I'll explain to you what they are likely to give it, or type of moves they are going to do it for the next week. Accordingly, we can plan our trades. So basically, during the month end and the new month beginning time, it is ideal or appropriate to focus on the swing trades. So we should not do the position trade, or we should not become totally bullish or bearish. We should try to take the positions accordingly as a swing trade. So sell near that of the high and buy near that of the low, or just make small 30-40 pips profit making swing trades. If you focus on, you will be able to really get the real advantage. So the players are slowly firming up here, pretending as if Euro and GBP could go up after that of the US GDP data release, but actually they wanted to do it other way. You know very well, they create the market sentiment and act against that of the traders. So if you have got any questions you like to ask me, you can ask the questions in the question answer window. I'll be able to read the questions which is placed here and answer to those questions. So I'm now looking forward to your questions to give the reply, either pertaining to that of the forecast or to that of any other information of the market. So we have another 6 minutes. If you've got any questions, kindly ask me. So the players are expected to make the swing and slide moves in the case of Euro and GBP during that of the US session. So we try to position ourselves, take some sell positions whenever they are firming up, and stop cutting the new high or stop cutting the intermediary high for about 10 to 30 minutes. Then we take the sell position around the recommended level, and then we try to book profit during that of the slide during your session. So the forecast is expecting the US GDP data to be neutral or slightly positive, giving some hawkish feel, and the players are here to make use of it and then try to make some slide in the case of Euro and GBP. And that is why small form of move we can take sell positions in the case of Euro and GBP, and also in the case of Australian dollar, and then buy position in the case of USD yen. So I'll come back by 13 GMT. Now it is 11:56 GMT. So almost close to 12 GMT. And by 13 GMT, I'll come back and just review the calls, what I given, and show you how exactly the market is expected to behave. There is a question from, is tomorrow month end different than other month ends? It is not like that. Every month end you come across a specific type of move. See, this time what happens? The last week of September gets over as a month end. So there are certain weeks wherein you come across the month gets over and the new month starts. Say for example, 29th and 30th of a month might fall in a week. Then first, second, and third of the next month might be in the same week. Then the players make a different type of move. And this time what happens, then 26th to 30th is the week of September, the last week of September. Then the next week is 3rd to 7th of October. So there are 2 weeks. One ends with a month, the other week starts with a new month. So in such a situation, the players are expected to make for 2 weeks the trend reversal moves. And you know the trend reversal move, they make it in the form of sequential trend reversal. They handle the commodity pairs to start with, commodity crosses, and then commodity pairs. Now you find that they are in contrarian move. Commodity, they are making big moves when compared to that of euro. So commodity pairs and commodity crosses they handle. Then they come to that of the yen and yen crosses. Yen with euro, yen with GBP, yen with CHF, yen with Australian dollar, like that. Then they handle all the yen crosses. Then they come to the majors, the 4 majors, Euro, GBP, USD yen, and USD CHF. Then finally, they handle the European crosses like Euro, GBP, then GBP, CHF, Euro, CHF. So that is how, in a sequential way, they handle the currencies during the month and time. So this time, there are 2 weeks they are going to bring in the trend reversal moves. That trend reversal moves are going to be volatile moves. So on certain days they will make the USD gaining move, on certain other days they will make the USD weakening move. And so when you find that the USD gaining move is there, and if you think that it might continue, they will simply reverse with the USD weakening move. That is why it is considered as a very volatile move. And also they make some extreme moves in the currencies. Unimaginable lows and unimaginable highs they set during that particular time. Normally, when you come across the market is very subdued, you expect it is going to be a range bound. Suddenly they will go to the extreme ranges. And also the following week, they make the extended stop and then stop making the new highs or the new lows. Any other question? Tomorrow, anyway, I'll be giving the Asian session live market analysis between 5 and 5:30 GMT. At that time, I'll explain more about what sort of month-end moves they are going to do it. So no question is coming forward. So I will just conclude the webinar. I take this opportunity to thank FX Trade for the facilities provided to present the webinar. I'll come back by 13 GMT and review and give you what happened to that of the trade recommendation I have given it, and also how exactly the players are expected to make further moves for the month, and I'll explain it for your advantage. So you can use it as a guiding factor and then try to use your appropriate trading strategy and earn nicely from the other market without market fear. Thank you one and all. See you by 13 GMT.